All right. Good afternoon, everybody. So today's charting is basically going to be basic fibs, when to get out, basically cut losses. I don't use stops personally. That's just not for me. I'm not a big stop loss guy. I actually never used stop losses ever in my life. Never did. I've seen a lot of people use it. I've seen stops get taken out. It's basically simple. It's similar to how I see stops. You can have a mental stop as well. So I use actually mental stops. So I can't say I don't use stops because I use mental stops. But as far as stops go, um, you have to basically tell yourself, all right, I'm willing to lose this amount, this percentage, or I'm willing to get out at this level. So what I'm going to do here is going to give you some basic breakdowns. We're going to basically chart first. I start with monthly charts. So when I'm looking at a chart, especially on a Sunday, this is why I like live Sunday videos, because Sundays we go over the bigger picture first, and then we get into the individual time frames and break it down more for going long or going short. You know, you can look at the chart and say, "Oh my God, it's overextended." Yeah, who cares? But you can say it's oversold, whatever you want. But this is the whole basic breakdown of how I look at every single chart when I'm going into a trade. So we're gonna start with PEP. This is the monthly chart. So I'm actually gonna scale it to the point where it looks much more better than it does. Okay, now we're gonna just shorten it a little bit. So here, usually what I do is I start with a channel. I like to start with channels because if I see a channel, I'm automatically going to start with a channel, because a channel is basically just another way of, this is basically the pattern. The pattern is the channel itself. So with PEP, I'm actually going to do this. I usually use, we're going to do extensions after that, but I'm actually going to draw my channel, and my channel might be different from your channels. I just add coefficients within my channels because it just looks cool. So that's why I do it. There's no science behind it. So I'm going to use 2008 lows, and I'm going to also use 2015 lows. And I'm going to extend my channel out. And as you can see, this line is actually touching 2011 lows as well, very close to it. So I'm going to extend it past, I'm going to extend it to 2021, just so that it covers anything past that. And I'm going to basically bring it all the way up to this year's high and bring it all the way back to 2007, well, 2008 high, because that was the beginning. Yeah, so I'm going to bring it up to that. And as you can see, when I pull it back, it shows you have a little pattern going. You have a trend. So this channel is also a trend. There's a trend going on with PEP. PEP was trading at these lows in 2008, came up to this purple level that we have here. Let me get my annotation out so I can draw and show you guys. Let me disable it for you guys just in case somebody wants to mess it up. Okay, so I use the yellow arrows. So we use this low. I didn't even try to connect it to this low, but it's basically forming from there. So this coefficient that I have going on here, this grayish purplish coefficient, as you can see, that is just something I added within the channel. And then I also added this one here, the blue one as well. It just goes with my fibs and everything like that. There's no correspondence to the fibs with this. It just makes more sense. And I like to see if there's any other trend within this channel. So as you can see, price came above the grayish purple line, got above it, almost touched this blue line here, but it couldn't. So it came back down and touched down the lower trend line. And you can just see like somewhat of a pattern going on here. Breaks the trend, goes to blue line, comes back to purple, goes above blue line, comes back all the way down to here, and then comes way back up to blue line. And there's a trend going. There's a trend going. Now it's just hugging these mid coefficients that I have drawn here. Gets closer, and then it does it again, comes all the way down here. See, but this time it almost touches the bottom level here, but it actually just comes to there. So it's basically similar to this one right here. And then it comes back above, keeps bouncing, keeps bouncing, keeps bouncing, and then it rockets all the way to the top here. Now, what happens is we have something like this. This is somewhat, so in this channel, we are all familiar with double tops when, let's say, the price is 131, comes down to 130, then it touches 131 again, and it doesn't break 131, so it comes right back down. That's considered a double top. It couldn't break that resistance. So there's also trend channel tops too, if you want as well. So we have a top going. This was a top. It topped out, came all the way back down here. This is a top here, but the target would also be blue level here. So you will look at 2001 120 puts. Actually, 2020 120 puts. You know, end of year, December, whatever that goes for, just in case. But if it breaks the top of this level here, it's going to continue to break out. Now that we have this trend line going on here, now I'm adding my extensions. So let me get rid of my annotations. Now we're going to bring this chart in a little bit closer. And how I work with extensions, I literally start from the trend where the trend line started. So that 2008 low, I'm going to do an extension from there, right? And I keep moving the extension up as time goes on. So I'm really not focusing on 2008, but I want to use 2008 because I want to see why this trend is so perfect. Why is it so clean? Like, why is it moving? I mean, why do they have it moving this perfect, you know, with the trend? So I'm going to pull it up to 2011 high, right? I'm using from 2008 lows to 2011 highs, bringing it down to 2011 lows because that was the next pullback, which is also closer to the lower trend line of that channel. And this is what we get when it connects. Oh, sorry guys. Hold on to make sure that's not. I don't want it doesn't have to be too accurate. You make it accurate when you want to. You fix it how you want to, right? So now what I do is I start zooming in now. I got the channel intact. I zoom in. I like to see every single thing. This is still a monthly. So now I got it going for a monthly. So what I'll do is I go into my weekly to see how it looks on a weekly time frame. I move it in. I just check out every single level, how everything looks. This is kind of accurate. So I want to redraw my trend lines. So I want to basically move a little bit closer. So I go back out into my monthly time frame. I'm going to actually remove my extensions because I feel like I can get a better accurate level on each of these candles. So this is what I want to do. So that's what I'm going to do. So I'm going to remove my extension here. And I'm going to draw a new extension. So I want to get a little bit more closer because it's actually better that way. So with that being said, I'm going to look for levels on this trend line. I mean, I can use this pullback here with this wick hammered right here for 2015 low. I can use that. So I'm going to actually use that. It's actually more closer. So we're actually going about 5 years, no, 3 years. So now I'm going to use this low here. That's 2015 low. And I'm going to use 2018 high. And then I'm going to bring it back down to 2018 low. It's getting a little bit more accurate, as you can see. If you look at your levels, and this is a monthly chart. So monthlies is a bigger picture. It's getting even more accurate, as you can see. Looking at all the levels, I can get rid of the channel now. Actually, I can really get rid of it. Don't really mind it. So as you can see on this channel for the monthly, PEP needed to hold 133.42, which is gray bar. I call it gray bar, or you can call it the gray level. As you can see what price did here. Got near it, bounced off of it. Very effective. And then before it was a resistance. But then this candle closed above, and then now it's bouncing off of it. So let's clear that. So, I mean, these are not too accurate now. So, I mean, these are a bit more accurate, more closer. As you can see, look here, more close, sorry. Rejected green level, close that green level here, closed above green level. So when that happens, it automatically goes to our purple level here, and then it moves to the gray bar, comes back down, and then it goes back up, closes above, bounces off, and then we hit for the purple bar, which is 142. So that would be more of December 142 would be the smartest thing to do. So I'm going to teach you guys another thing about that as well. how to basically which strike to buy and how to approach that strike with the time, with the expiry as well, so that you're not basically overpaying, because nobody wants to overpay for anything. So let me clear this. Oops, where's my annotation at? All right. So so let's continue. Let's finish. Let's add more extensions. Let's remove this one now. We're getting closer. So let's see. I like this April low for 2018. So I'm going to use that now as my first level, first point, right? And then I'm going to use the, not it's not the high, it's basically closer to the high. It's more, almost a double top that year, but I'm going to use the secondary high, because it's, why it's a secondary high to me is because the high for 2018 was this candle here, the opening candle, opening monthly candle. And then the second high, which is the nearest high, would be the ending candle, the second to last candle, monthly candle, which was November. So I'm going to use that high. And then I'm going to use the ending low of that year of 2018 as my second point. You see, the more accurate this becomes, look exactly where, if I was paying attention to Pep this whole month, we could have nailed this trade from top to bottom, from top to bottom. I'm actually going to get rid of this channel so that everything looks more clear. I'm actually going to go into weekly now. Here we go. And this is the weekly of this week that just passed. Look how accurate it is. It's just crazy how everything, all the levels, how they respond to price, right? So here with this weekly hammer that we have this week, the reason I'm choosing the 135s because Pepsi has a 2 to 3 point range, weekly range. Last week's range was $2.33. Prior week to that was $4.53. Prior week to that was $2.93. Almost $3, almost a $3 range. 2 is the minimum, I would say. 2 points is the minimum. Yes, 2 points is the minimum, the smallest range Pep can go. Right? So now we're trading with the weekly chart. It's much more accurate. I actually did another chart too that was actually even more accurate, but this shows you that 131.41 level. That was a level to buy and go long at, to take a starter. So I'm actually going to get rid of this extension as well, because I found another level when I was playing with my extensions. So now I have the weekly open. Now we can use something else. So I think it was, if I'm correct, yes, it was here. So I used the 2017 low. This is using a weekly chart now. And then I used the mid-high. This is the, I would say this is the second to third high. That's around 118.46. And then I used the low for this candle. So you can just hover over the candle before you actually place that last point. The low is 104.53. You can actually go into settings and edit that to make it accurate as possible. But I'm not going to do that. But I want this to line up as perfect as possible. You can also mess with the second point. I'm activating it now. This is the second point, as you can see here. You can make it work to where it's actually lining up with 140.47, which was basically the top level for 2019 this year of October. You know, it's just as accurate, not too bad. It lines up right here, perfect. I want this to be as accurate as possible, so I want to bring it over, line it up, perfect. Now I'm going to show you each individual point. So I used, first point was here. Second point was this candle right here, which also lines up with our purple bar, 118.43. Third point, last point, ending point, was 104.49, which is not really the low. It just lines up with it. You can change that if you want, just hover above it. And then our next point came up to here, which is basically close to the top. But I'm actually going to fix that now. Let me just fix it because I just moved it over. Can bring it down just so that it's somewhat accurate. If I actually change the points, it would be just a little bit more accurate. But if you look at how these arrows are working right now, oops, I don't want to. All right, good. Now, if you look at each level, look, this was a rejection, gray bar. they brought it all the way back down to this gray bar. So when price is in between gray bars, when it gets above red bar, the next level is the upper gray bar. If it rejects that, it comes back down to red bar. And if it closes below red bar, your target is either first double bars. Don't worry about double bars because these are just my levels. You come back down to the gray bar. So now we're going to get more into choosing a strike. If it doesn't reach a certain day, if it doesn't reach a certain price by a certain day, when to get out of that price. So off the back, looking at this weekly, I look at the hammer that we formed yesterday. And I'm also using my 14 and 30 SMA to simplify this trade idea that I had and why I got into the position. So we bounced off the 30 SMA. We came below it. We closed above it. And now our target, as always to me, is once we test that 30 SMA and the 14 SMA is above the 30, is a vacuum back to the 30 SMA. The vacuum back can take a week, 2 weeks, 3 weeks, maybe even a month for it to happen, depending on how extended it is. For example, we got here, so we're going to use this one. So price closed above the 14 here, but it rejected it and it came down, got close to the 30, but then it tested the 30 the week after that. The next week, it took 1 week for it to go back to the 14 SMA, which is good. This is really good. We will want that we'll get into profit even faster, and that would be great for price. But for here that we have on last week's hammer, I'm targeting 135. The reason I took 135 calls is because, one, it's more smarter. It's more smart. So a better decision than taking 136, 137. So 137, it's a lotto to me. So instead of taking 136s, I would take the 136s for November 29th. I would take the 135s for November 22nd, which is next Friday. I use these resistance levels as a target for my strikes. Why? Is because price usually gets there. Like, for instance, last week with knock, I chose the 360s as a lotto. Why? Because 360 something, it was 360.22, was the weekly 14 SMA vacuum. We hit 359.84. So as price went up, SMA came down. So that changed on knock. So that was my target for a lotto. If it extended over that, even better. But the 355s automatically worked. Why? Because I did 5 points below my target for the closing week. So here, this is PEP. You want to play smart. The 14 SMA is showing on the weekly at 135.54. The smartest decision to do if you're playing weeklies for this trade is play 134. And if they had increments of 50 cents, 134.50s. But if you're not sure it doesn't get there, it can even be an inside week to next week on this hammer. It could be a small move up and not even touch the 14 SMA. So you want to play smart. You can buy, you know what, I'll buy the 134 calls this week. I'll buy the 135 calls next week. And I'll even buy the 137 calls 3 weeks out because it has a possibility of being back there. So now what I do here is, now we're going to get into the nitty gritty of mental stops. Or if price doesn't hold here, I am out. I'll look for a re-entry another day or another time of day. So I'm now breaking it down to the daily. Now here's PEP. See, look how clean it looks. Even the daily, all candles react with each level. So now instead of using extension, I'm going to use my retracement now. So I use retracements within my extensions. These levels that you see here, the different colors, I like my extensions color-coded. I like my retracements color-coded. You can do whatever you want. Use the basics. Don't worry about the double bar and this and that. This is just something I'm still playing with, and it still has time to work. I'm still tweaking it as it goes on until it becomes something that is legit. Nothing's literally legit. It just works when it works. So now I'm going to take my retracement, and I'm going to draw from the high. So the red bar showing 140.59. I'm going to use that red bar. Actually, let me bring this chart in just a little bit more so you guys can see. I go back to where the breakout happened, which was 126.80. Before that, there was no candle action over here. So this was all the candle action is here. So I take my top of the red bar, bring it all the way down to this purple bar at 126.80, right? And when I do that, look at the price in between. You see everything. Red bar here at 132.06, right? Give me 1 second. Look how it reacted. Look at this. Look what happens when price gets above this and holds above it. Price here, closed at it, gapped above it, hit the green bar, came back down to red bar. Once it got above green bar, it definitely touched the purple bar, came all the way back down under red bar, which you start taking starters to go long. So when trading below the red bar, you want to take small positions and use the red bar as your resistance, as your strike. So if the price is trading, let's say 131, you want to take 132 calls. That's your target because you know price vacuums back up to that level, to that red bar. So now we're going to go into, we're in a position right now. So we're in the 135s for next week. For those that got in, possibly end of day, I got in end of day. And actually we're starting to scale in after I'm getting out of knock. Forget about how the chart looks right now. Let's just focus on the levels. So we noticed that 132.06 had to hold last week, right? So that was, this is Friday, Thursday, Wednesday, Tuesday, Monday. So Monday, and then Tuesday was a low. Tuesday was a good time to go long 133s end of week and 133s next week, right? So now that we're in 135s, price is way, way, way below. Not way below, but it's good enough. It's below the 14 and 30 SMA. So now we're the price is outside of the 14 and 30 SMA. So we need that vacuum to happen. As you can see, the 14 is actually in line with the middle Fib extension, which is our green bar, which is 134.49. They line up together. See, so this week we closed above the blue bar, which is very important because once we close above blue bar, next bar should basically vacuum to green bar. After it vacuums to green bar, comes back down, and it should vacuum back up to purple bar, which would be 135.30. So our target here is a vacuum. This 30 SMA is going to come down within the 135.30, which is the purple bar here. So for this trade to work, we're in the 135s for next week. By Wednesday, if we do not see 134.49, I will revisit this because as the days go on, your premium decays. So it starts to lose value. Closer by Thursday at a certain time, it's already starting to drop. By Friday, it's dropping by the hour. If price is not holding and price is basically fluctuating up and down, it's dropping even more. So I give trades till Wednesday. You can give a trade till end of day. You can give a trade till Tuesday. You can give a trade till Friday. I give a trade, and if you bought time, you can still use this method. So I give a trade till Wednesday. So I know Pep has daily ranges. So we'll look at the daily ranges. Daily ranges are dollar moves. Not bad. Really good. So within 2 days, a dollar move up and down, depending on where it closes at. So we closed at 133.68. So let's say we open up at 133.68. I'm going to definitely add to my 135s. And then I'm going to start nibbling for 136s for the following week. Like a strike out as time goes on. A strike out. So by Wednesday, it's 134.49. If we have not seen 134.49, I got to get out this trade. But if we close near 134.49, why am I going to get out this trade? Honestly, we should already be in profit by Wednesday, at least 20% to 30%, because we're already near the money. We're not at the money, we're near the money. And for those that are smart, you'll play the 134 calls. You can play the 130. Actually, we're playing the 134 calls. I'm so sorry. Because we played the 134 as a lotto this Friday. They did not work. So we took the 134s for next week. So that's what we're doing. So by 134.49, we're already in profit. We should definitely be in profit. But if it's not holding that level by Wednesday, that's when you start cutting your position and see if there's going to be a pullback so you can get back into this trade again. Because there's nothing wrong with getting back in the trade and you get better opportunity and you can use your profits to get back into that trade. But this is how I use my stops. Wednesday is my stop. If the trade's not working, I'm out of it by Wednesday. Sometimes I even hold into Thursday because it's just hovering at that price that I need it to hold. So by Wednesday and Thursday, if 134.49 is holding, they're gonna push it either hard Friday or into close Thursday and take it to and vacuum it up. We should see a vacuum by Wednesday. I don't see why not. Pep has amazing moves, and especially when it's flagging right now too. Has a nice wedge going, a nice wedge to it. But that's what you should do. That's how you should trade. I mean, if you want to use stops, use stops. They'll take your stop out, and then you'll be pissed. You take a $20, $30, $100 loss, whatever it is, and then 20 minutes later, Pep is up 60 cents or $1. You know, they take those stops out. So me, use a mental stop. Simple as that. Or buy times. Buying time is so you don't have to worry about stops. You know, I mean, it might sound dumb to most, but to me, if you buy 2 weeks out, the decay is not really much. You can lose like 10 cents in decay or 3 cents in decay, depending on the price of the premium. But that's a basic strategy. We can get more into this for Pep. Like right now, look, you got the red bar is 140.59. That's the upper red bar. And then you have the 132.06 is the lower red bar. So now we're within range. We need to get above the 135.30 for this trade to really work out and become another long-term play. So we can make it a core play. I want to make this a core play. So that's what I want to do this week. I want to make Pep a core play because I like the setup. I like the hammer off the weekly. Similar to Knock. Knock had a hammer off the weekly a week ago. We made money on Knock last week, and we made money on Knock the week before. You know, now Knock is going to pull back. So once it's probably going to go inside this week. But that's what Pep. See, this is just an example. This is using Pep. And if you want to break it down and go into the H4, which is the 4 hour, we can go into the 4 hour too. It gets more into details. 4 hours is actually beautiful. It's flagging here. That 133.68 close above, that was great. Now, but see now, if you look at it, and you're just using the 14 and 30 SMA, or you can just use your levels. Doesn't matter what you do. Now, I can remove all of these levels and just trade with my 14 and 30 SMA. But it's best to have levels. If those that need to rely on knowing when to get out, have your levels in play. Me, this is usually me. Clean chart. 14 and 30 SMA. Price is already within here. We're going to back into that 134.46. So here's a profit-taking strategy. So you don't feel any type of way. So let's say I have 100, not even. We're going to play it small. Let's say I have 10 contracts. Pep was trading at 33 cents for the 134s next week, right? 10 contracts, $240 position. At 134.56, right? I'm going to actually go over this trade. So here we go. So by, let's say Tuesday, 134.56 hits, right? So let's do that. Let's reset. So by Tuesday, I'm going to put my chart to Tuesday, which is going to be the 19th. Decay is going to happen already. So this is already pricing in that as well. So let's price in by Monday. Actually, let's drop it. So let's go to the 18th. By Monday, our 134s are going to be at 66 cents if the price is still at where it's at now, if it opens there, right? It's going to come down just a little bit, which is not too bad, right? All right. So we factor that in. I move my chart to Tuesday, the 19th. Let's say by Tuesday, we get our vacuum to 134.46. Usually Mondays are the times where price actually moves. It really moves, you know, and then it comes back down Tuesday for a re-entry, depending on how it goes. So if we vacuum to 134.56, I'm going to make it 134.49 because that 30 SMA is going to actually come down lower. And that's a good thing. So use that as a target. So whatever the SMA is, take 20 cents off of it, depending on if it's a 3-digit stock, a 2-digit stock, 1-digit stock. Take 20 cents off of it, 30 cents off of it. But if you know, I mean, I'm using the H4 candles. So those are like $1 points, $1 move, so $1 range. So you can take off even 50 cents from it. You can take off, and the target could be 134, but I'll take off 20 cents because that 30 SMA is going to drop. And that's a good thing. So go back to trades. So by Tuesday, let me go back. It's 134.56, right? So I input for Tuesday, 134.56. I'm going to put in, let's say, a 60-point range. Perfect. Gets me to 134.41. So it's 60 points by Tuesday. Puts us at 90 cents, which is basically where we were at. But this is actually good. This is for the 134s. Puts us at that. Possibly might even go higher than that. So let's do $1 range. I just want to show you the basics, like to understand it. So it puts it at 116. So at 116 or near the 30 SMA, I want to take profit. So I have 10 contracts. So here at this level, let me get my arrows. There we go. All right. So here, somewhere here, or it can be here, because that 14 is coming, that 30 SMA is coming down. So if price comes to this level, and let me use a level 2 as well. So let's say price vacuums to here. Boom. 134.55. I'm going to take off 5 contracts here. Now, what price usually does in this sense, it usually comes back down before it actually breaks out of the 14 and 30 SMA. So when price is basically hovering in between here, 14 and 30 SMA, it usually breaks out of it. So I'm going to take my profit at 134.55, which is the 30 SMA. You can even cut 8 contracts, just so you have 2 contracts, just in case it gets away and it just rips. So I'm going to take off 8 contracts, or somebody like myself, I have the balls to hold on, you know. And if I have 10 contracts, I really don't mind it. But for small accounts, you have 10 contracts, take off 7. And then let's say that happens. So price comes into here, right? Now price is going to bounce right back somewhere around here, the next level, which would be, I'm not sure what this is here, but it'll be right around here. You got to re-entry, and your 14 is actually going to curve. So it's going to come around here. So let's say price comes back down here. Now now you're basically, you can even add those 7 contracts back again, but you're still locking in profit when you add those 7 contracts back again, because the price is probably going to drop, let's say 20 to 30 cents. So the premium is like $1. Let's say you got out at $1.20 from paying 40 cents. You sold 7 contracts of 10. Now premium drops. Price goes from 134.55 all the way back down to, let's say, 133.60. Bounces back down to 133.60. Stays right there. And when it gets there, you re-add. So at that time, now the premiums are under $1. So the premium dropped, let's say, 40 cents. Now you get to get in near to where you paid at again, but you're locking in profit. You're going back in with adding 7 contracts, making your position 10 contracts as total. And then you do it again. You get to 134, which when it tests 134.55, where you recently sold the second time, you can take off even less now. You can take off 6 contracts or even 5 contracts and free ride those last 5 contracts. So no matter where price goes, you're still in profit. That's a great strategy. And I actually can make an account. I'm probably going to start Monday, a small account. I have 2 trading accounts. As you can see, one that says Princess and one that says Trade with Ninja. So the Princess one is the big account. But what I wanted to show you is it's very possible and it's very easy. And options take 1 day to settle. So if you buy Monday, you sell Tuesday, you buy Tuesday again. And then you sell Wednesday. And there's a way around in good faith violations. You can use 1 a week because it will re-up by a certain time period. But it's how you do it. And if your account gets to a certain extent, you don't even have to worry about in good faith violations. But this is an easy way to make a $500 account go to 1,000 by end of week. It will be small builds, but it will work. And I'm not saying use your full capital. So if contracts are 30 cents, yeah, $500, buying 5 to 10 contracts is not bad. You want to at least still have $200 to play with. And that $200 to play with is literally something you don't want to just use. You want to just know that it's there. Because you don't want to always use it and have no cash to play with, because you're going to be like, oh, I could have just added even more if I had more cash. Leave that 200 there, see what happens, and just watch it build up. It's going to build up. Do that all the time. It's not rocket science, people. Stop being greedy. I say this in every video. Stop being greedy. Me, I wasn't being greedy Friday with Knock. I literally had to go. $5 was my exit. 300 contracts. It hit 420. 80 cents off, 80 cents below my target. And to be honest with you guys, there's a reason I'd rather you guys get out before me, because there's been many times that I buy weeklies. I could buy at the money weeklies, and I can sell 300 contracts, and I could drop the stock 3 points. For example, look at what happened Friday. People are like, come on, not go up. I said, I'm sorry. I mean, I can't apologize because I make money as well. But E-Trade sold out all those 300 contracts and it dropped not 2 points. And you do the math, 300 contracts is equivalent to, everybody knows, each contract is worth 100 shares. So when I say SPTP, because once I get all out, that's it. It's dropping. And you're going to miss an opportunity to get out. So take the opportunity that's there. Because that's very important. I'm not going to lie to you. I was a little pissed at myself. I missed out on another 60K Friday morning. I wanted to dump everything. I even told myself even $4. But then again, I'm like, oh, it's going to even go higher. The ask was $4.60. The bid was $4. And I'm like, if that bid was $4.20, the bid wasn't $4.20, but somebody filled $4.20. If that bid was $4.20, I was going to liquidate all 300 contracts. It would have dropped it and probably brought me down to $3, which would have been even perfect for me. Ended up closing out at 100% when I was already up 300%. So I use size. This is why I don't want you guys knowing what my size is. And this is another reason I don't tell you size. Because if I'm buying 300 contracts of a trade of a weekly at the money and somebody else in the team is buying 300 contracts at the money, both of us liquidate out 300 contracts. I mean, there's probably be a buyer. I did it with Pep before too. I had like 500 contracts of Pep and I liquidated. I made money on it. It liquidated Pep and then Pep bounced back. It dropped $3 and then it bounced back up $3 within like 10 minutes. But it's gonna make people panic. So this is why I say buy time, because it really doesn't affect you. I mean, I can buy time with 300 contracts, 500 contracts. I know what I'm doing. And I don't say how many contracts. And a lot of services are stopping that as well now. And now they get the point of why Ninja does not tell people how many contracts he has. He only tells people when he's selling. So I'm in this trade. I'm in XYZ at 32 cents. You can see that volume there. Doesn't mean all those contracts are me. I'm the guy that buys 10 contracts to open Monday. By Wednesday, I'm now at 80 contracts or 100 contracts. By Thursday, I'm now at 200 contracts. I'm not telling you to do this, but this is how I accumulate. I accumulate because these prices are holding. I already sold, but I'm back in again. Fridays, I usually take 200 contracts or whatever in one sweep because it's a lotto. But I can risk that. But this is what you guys thinking I'm getting in 300 contracts upon open. Nope, but I see a lot of you guys do that. And this is why you guys lose your asses. Sorry for the profanity. But I'm just keeping it real with you guys. And it's going to be for other people to watch this video as well. There's no secret behind any of it. It's just a fact. You guys want to make money? You're not going to make money. You're not going to be profitable being greedy. This market is not going anywhere. And I'm learning that. I'm learning that day by in, day out. On my wall, I have it say SPTP. I have my top watch core and my top watch lotto. Last week, top watch on my wall says BYND. Last week, top watch core was Knock, Met, and Guild. Knock became main core from last week. Main core. When you see me say small, I'm in small. When you see me say in, I'm in starter. When I say these words small, starter, take that with a grain of salt. Take it as if Ninja is not sure. If I say I'm in something, still take it as a grain of salt because you don't know where it's going to go. There's no, oh, is this a high probability trade, Ninja? This is why I make cores now. Cores are, we go over it because it's a perfect setup, looks good. It's easy to read, getting out each level, everything, all that, etc. makes sense. So people are like, oh, can you label this trade as high probability trade so I know how much to put in? No, because if I do that, you're going to go in heavy. And if the trade goes bad, you're going to be like, oh my God, this is the worst week of my life. And I'm going to be honest, I mute people that do that to me. Because I go over our conversations. I had DMs with a lot of members, even on Twitter and people in here. I go over our DMs and I had people tell me, yes, next week I'm going to just focus on cores, no lottos. The next week they were playing lottos. And then it happened again. They beat themselves up. I'm like, listen, I can only show you the way. I cannot tell you what to do. I can give you a setup and say, hey, I like this. This is why I like this. You show me why you like it too. When it's something I'm not focusing on and you guys are not focused and you guys are focusing on it, and you're like, oh, Ninja, can you draw levels? Show me the levels for this stock. I'm like, no, I'm not showing you the level for that stock. I'm not focused on that stock. And why should I show you the levels? What am I teaching you? I have people that have been here for two months, and I get it. It's an alert system. But I rather it more for an educational system, an educational thing. You've been here for 2 months, and you still asking me for levels of knock. We've been trading knock for 2 years. Levels don't change. Just the price does. So keep that in mind. Have a plan. Write things down. I bought paint, whiteboard paint for my wall. I love it. And every morning, Monday, last week I wrote week 11-15, which I don't write the Monday starting date. I write the expiry date. Week 11-15, everything's going to expire. Starting capital, 18K. Open positions, knock, 11-15. Text, this, that, and then gains and losses at the end. You have to have a plan. I have members, I'm sorry, like, I'm as blunt as it gets. They take positions. I'm like, listen, this is a good position. Why I like it? Because you have time. Look at the weekly, got a vacuum, targeting 147. Look at HSY. HXY exceeded in 1 week. I was looking for 146, 147 next week. It exceeded in 1 week and paid out. And it gets me. It just drives me crazy. And then the people are pissed off, like, you're taking your own trades. That's fine. I don't care if you take your own trade, but don't vent in the room as if it's the service, because that's how you make me feel. I know it's your trades, but you make it seem like it's my trades. So when new members come into the team, they're thinking, oh, wow, this guy didn't do good. But if you look at the trades that this person does, and another thing that irks me, on the trading floor, post your trades in the trading floor. Stop posting an off-topic your trades. Honestly, yes, you're proud of your gains, but stop showing your winners. Show your losers in the trading and off-topic, please. Like that boasting, I'm up $3,000, $30,000, I'm $30,000. Stop that boasting, honestly. Do it end of week. Do it when you know that you're actually up on the week, because you can be up $30,000 by Wednesday, and by Friday you'll be down 60K. How I know this is I was up Friday morning I was up $90,000. By Friday evening on pound close, I was back down 70K. But am I up for the week? Yes, I'm up for the week. But I didn't boast like I posted on Twitter. This was my peak at 133. I should have sold, but I didn't want to sell because I didn't want to drop the stock. And I didn't know what they would mark me out at. But when E-Trade marked me out end of day at $2, that was the minimum I would ever take. And I was happy for it. There's no need to boast. You're boasting about these gains, but a week ago you were crying. I just don't get that mentality. Don't join my community because you want to boast about your gains to make yourself look better than everybody else. I've seen members come in here. They've been in here for a month, 2 months, 3 months. They made their weekly goal in 2 days. This one member, I'm not gonna say. I think it's Raul. I think it's Raj. It's probably Raj. I have to call him out because I'm very proud of him. He's been stopped trading by Wednesday. He goes, once he hits his goal for the week, he does not trade. He doesn't even take lottos. He stopped lottos. If he has the funds to play lottos, but he chooses not to. He likes his streak. He's on a streak. He's playing core plays. He said by Wednesday, he already made week 1 and he made week 2 and 3 gains already. Goal. And that's why he stopped. He's on tier 2 now from tier 1. And tier 1, I think, is 500 to 1,000. You guys wanted these overnights. Like, I understand lottos do hit, yes. My purpose for my lottos is these are testers. I can buy 500. So if it does hit, hey, it works. If it doesn't hit, that's a loss. Like, if I do a lotto for, let's say, XYZ 123 calls, the price is trading at 120. Take next week's lotto. Try that. Take the lotto for next week. You know, you can still take a lot off for next week. There's nothing wrong with that. But this was today's basic lesson. How to use levels for your stops or to exit, cut your losses, and stop going heavy. See, for me, the reason it doesn't affect me, like being down 50% or 60% on a position or even 99% on a position, is because I'm like, you know what? Let's see what happens. I'll either double down, triple down, quad down sometimes. I've done that before, you know? But in other cases, just get out the position. If it's not working, do this. If you know you hold till Wednesday or even till Thursday, try to hold till Tuesday, see what happens. But just not working out for you, get out of it. Revisit it by Wednesday. You got to learn how to sit and wait. I go in at open. But the thing is, and I member made a comment of this. That member's no longer here, no offense. But I'm the guinea pig. I'm the one that can take the losses. But the thing is, it's not me taking losses. I'm paying a higher premium than everybody else, and I'm okay with that. That's what you guys don't understand. I'm not taking losses. Like BYND, the trash talking with that. Let me take the losses. It's not, see, if it's worded, let me pay a higher premium, then I don't care about it. But let me take the losses. It's not, I'm not taking losses. I was in profit with BYND. I turned a small account from 2K to 9K just on BYND. And then I had people message me like, oh, they're down on BYND. I'm like, how are you down on BYND? You're in your third re-entry. A lot of people are in profit on BYND. That means you're going too heavy. When you complain about a position, it's because you're too heavy. You need to find out what price works for you. How many contracts works for you? How much are you willing to spend on this trade? How much are you willing to lose on this trade? All right, so I'm going to actually stop the recording now.